Hello everyone and welcome to the channel. My name is Hemingway Jones. Today I'd like to talk about something that I never really got into before, but it actually touches on a bunch of my different interests. So we're going to talk about Rolex, the watches in particular, and whether or not their values, that is what they're selling for at jewelry stores and online, is a bubble or not. So stay tuned. I normally don't like to get into this kind of a discussion, but it's one of those things that you see quite a bit being posted on online and written about in the media. And it is a really interesting topic, and I think it covers a lot of different areas. And I think I have a unique take on it, or at least a slightly different take, considering that my background is in financial services. So I have a little bit of that side. I've also seen some bubbles crash. I was there in Boston with some expertise in what was going on with the taxi medallion market and watched that crash from a valuation of an asset of around $750,000 down to around $22,000 where it's trading today. Of course, there are all kinds of reasons as to why that happened. There's different indications as to how you know you're in a bubble, and different things to look out for. So I just thought we'd have a general conversation where I will go on some of these different threads of what makes a bubble, how you can identify it, whether or not Rolex fits into that category, and what it means in the future for those of us that have Rolex watches or just fans of watches in general. Also, I want to say I'm speaking about this purely for fun, not representing anything, not telling you how to invest or anything else. It's just one guy's opinion. It's also just my opinion. Feel free to disagree with me. In fact, I hope you do. And if you do, please put it in the comments. Be good enough to leave a like, and if you would, subscribe. I'd appreciate it very much. Another point I want to make, that if you believe what I say or anyone else in regards to whether something's a bubble and when it's going to change, you shouldn't do that, because no one ever knows. Bubbles are one of the most difficult things to predict. It's hard to know when you're in a bubble, and it's hard to know when it's going to break. But there are some things to look out for, and it's a fun topic to speak about. And the one way to totally negate this argument is to pay a good price for whatever watch you want, hold it as long as you want, enjoy it, and don't think of it as an investment. Watches were never meant to be investments, although they are slowly, in a sense, becoming so. And I have a theory as to why, and we'll speak about that a bit later in the video. Okay, so let's just quickly define what a bubble is. So essentially, a bubble is when an asset is completely overvalued beyond that which it should support. So it's sort of like if you receive a certain cash flow from a piece of real estate, and then you throw a cap rate on there, and it gives you, rule of thumb cap rates in real estate is like 6% generally. Real estate's actually much lower than that right now, but let's use that as a rule of thumb. So you throw that cap rate onto a income stream, and it generates a value of $800,000 for a rental property, and it's selling for $3 million. So really, the intrinsic value of the property seems to be inflated, seems to be beyond that which it should be able to support. Now, if you think about that, watches already have this huge intrinsic value markup that's already contained in the fact that it has a brand on it, right? Because the intrinsic value of the stainless steel and the craftsmanship is maybe a couple of grand. I mean, I don't know what the costs are. I'd love to see the cost structure for Rolex, right? But let's imagine, right? But then you put the Rolex name on there, there's all the brand associations, all the history and everything else. And there's already an inflated value, which makes it a luxury good to begin with. But then how do you go from a $9,000 Submariner at retail to a $13,000, $14,000 Submariner on the secondary market? Now, as we know, part of that is demand, right? And that's happening with a lot of things right now. So if you want a Submariner, you can go on a waiting list and you'll probably never see it. I mean, we all know that the authorized dealers, they play very loose with their lists, and maybe you'll see it a couple years from now, if ever, depending on how much you spend at that particular dealer. But if you want that Rolex and you want it now, then you have to go on Chrono24 or down to your favorite jeweler, usually secondhand jeweler or gray market, and see what you can get one for. Now, there's also a big sort of perception that's off in all this, right? And that's what they're selling for versus what they're worth. So one of the things I really like about Bob's is they often give you what they're paying for the watch. And that gives you an idea of how they see the value. It's what they're being sold for, not what they're being offered for. So there's always a bit of inflation there. If you ever heard someone who's like, oh, I got an old typewriter, it's worth $500, I saw it listed on eBay. Well, sure, did it sell for $500? So there's that disconnect. But still, we know that these sale prices are overinflated and that they're far beyond that which you would expect on a watch that's selling for $9,000 or so at an authorized dealer. So when that demand is there, it's the demand that fuels the bubble. I like to think of it as the demand is the air inside of the bubble. So people want these watches, they can't get them because the restrictive nature of the wait list at the authorized dealers is also fueling demand. So you have no other way. You have to buy this thing either used or gray market. And there's enough people out there willing to pay an inflated price, and that drives the price up and further. Now you see this even more so on the more rare watches and the discontinued ones. The other very important part to this is that what drives that up then is speculation too. Because dealers, watch dealers, people who resell watches in the secondary market, they then are buying these and reselling them at the gray market dealers and all that. So they have a vested interest in keeping those prices high, and they're also betting on the fact that they will remain high. So as long as people are buying them, and even private individuals holding on to them, reselling them, maybe buying other watches, is also fueling this bubble, adding air and making it larger. Now, another thing that led to all of this growth in the bubble is the fact that over the last year and a half, people have had extra money, which sounds funny when you think about how the latest events have affected people, but a lot of people aren't taking expensive vacations. They're not going overseas, and instead they're staying local. And all that extra money is being funneled into some other areas. And that's why the luxury sector has done quite well. Someone doesn't take 4 kids to Italy for the 2 weeks during the summer. That $7,500 then can go toward that Rolex. And I think that's happening because we do see that sales are fairly robust. Now, to introduce yet another factor, we all know that the raw materials to make these things went offline for a period of months to longer and have caused very substantial backups in the whole supply chain for watches and for everything else around the world. Also, there are fewer workers out there that can move things around or process things within factories where they make the watches and moving these things around and to market. So all of those factors lead to this scarcity mentality. And if there's anything that people like more in a motivation to get somebody to buy, it's the feeling that you won't be able to get one. That scarcity, either in backlog, in the fact that the raw materials aren't there, or the fact that Rolex is only releasing so many to authorized dealers, and the fact that the authorized dealers have their list and they're only allowing so many to be sold, that's all that feeling, that panic of scarcity, and that drives people more, and that feeds that hunger to get one of these watches. Now, one of the things that really surprised me is that there's a perception of scarcity, but is there actually a scarcity. And what I mean by that is, if you go out right now and you look at Chrono 24, you look at Bob's Watches, you look at these various other companies and see how many Submariners are for sale right now, I think you'd be astounded by the number. And I don't mean to just pick on the Submariner, it's just, we're using that for the example, but it's any Rolex. If you pull those up, there's usually hundreds, if not thousands, available at any given time. And I would be so bold as to say, it's harder to get a watch like a Black Bay 58. There's usually only a few hundred out there. So is it a real scarcity when there's that many of these assets out there? Okay. So one of the things that these companies can do that benefit themselves is to hold on to the asset and not sell for less. That regardless of negotiation, you hold your price so that then the price is maintained. And if you're an outsized market participant, if you have a percentage of the available market, like some of these large gray market dealers or resellers have, then it's in your best interest to maintain that price. So another thing that's a sign of a bubble is when people tell these stories about what great deals they've had and how well they did in the market. So in the taxi medallion situation that I saw collapse, people were bragging about how they had bought them for $50,000 and sold them for $650,000. And, you know, good for them. That's what America's all about, right? It was the same with the tulip mania and real estate in the 80s and the 90s and whatever crash you want to find, or even the stock market. Once you start to hear these stories of people saying, well, I bought my Submariner for $2,500 and I just sold it for 10 grand. Well, that's another sign typically of a bubble. If you're looking for a sign that there is a bubble in the Rolex market, they're all there. You can check down the list, but that doesn't necessarily mean that's what's going on or that this bubble is going to pop anytime soon. One of the things that makes this very confusing for me is that what usually pops the bubble is when people decide to take their profit. When they realize that it's inflated, that it's beyond that which it can support, and everyone en masse, or it's a panic sell, they decide to get out all at once. Well, you almost already have that as a matter of course, not as any kind of panic sell, but just in the fact that there's always thousands of these things available at any given time. But they're available at very high prices, which has been stabilizing this and kind of negating one of the dynamics that usually takes the air out of a bubble. And I have a theory as to why, and I could be totally off with this, but hear me out. Let me know what you think and feel free to disagree. So what I think is happening with Rolex and with luxury watches in general is the same sort of thing that happens with the valuations of something like crypto, right? So the value in crypto is the blockchain and the fact that it's a very secure transaction, that you can trace it and it's part of the blockchain process. And people agree upon that which they'll pay for a unit of Bitcoin. And it all leads into what the value is. Now, Rolex is very similar right now. It's almost like a type of cryptocurrency itself. And as we know, Rolexes are kind of used as a certain type of currency. They're certainly convertible to cash, and someone will instantly, and by instantly I mean, within a few days, give you some sort of cash for it. Whether that's the full price of what's being shown online or something less, it's still substantial and a big part, and probably more than the retail price. So you have an asset that's sort of acting like crypto, and certainly not as secure. I mean, you want the box and papers, but you're not getting a blockchain with a Rolex. But you have a group of people that are saying, we agree that this watch is worth X, and we'll trade it for that amount. So that's what's going on right now. And I think that dynamic, coupled with the fact that there are scarcities now in materials and everything else, and that people have still a strong demand for these watches, that unless something changes fundamentally out there in the economy, drastic, where people don't have the disposable income as they've been showing, people are showing a surprising amount of liquidity for what looks like a very tough going in the economy. Now, could something like the devaluation of the American dollar affect the price of Rolex? Yes. Every asset can be revalued by the fact that interest rates are going up and that there seems to be some inflation. But if the Fed is correct, and that's another unsettled question, then this could be a short-term inflation event, and some of these asset classes, real estate, which is also going gangbusters, and watches may not be affected at all. So those are my thoughts. If you think I'm all wet, let me know. Come at me in the comments. I'm a big boy, I can take it. I offer this just conversationally. Don't make any decisions based on it. Just do your own calculations and figure out what you think is a fair price for a watch, and how much you're willing to pay for it, and whether or not, if you do own one currently, if it's a good or bad time for you to sell it. So I hope you appreciated this. I enjoyed laying out my thoughts. It's a little different. I hope I didn't bore you to death. So if you like this video, please leave me a like, a comment, but most of all, please subscribe. I'm trying to get up to 1,000 members where maybe I can get noticed a little more, and I'm trying to build the channel. So I hope you enjoy it. I love talking to you guys, and I'll see you again very soon.